In today's video, we are going to backtest one of the safest TradingView indicator strategies available on YouTube at the moment. This strategy includes two highly effective yet simple trading indicators, which are coupled with basic price action rules, leading to insane accuracy and profitability. More precisely, we will backtest our strategy known as the best TradingView indicators strategy that no one will tell you. And let's see how good this strategy is by analyzing key operating metrics of it such as win rate, account growth, and profit factor. During this video, we also will show you how you can get access to our top-notch private indicator, known as QuantAlgo. This algo tells you when to buy and when to sell, giving you an insane advantage over other traders. Before we continue, make sure to hit the subscribe button and hit the notifications bell so that you can keep up to date with new content releases. We also want to note that you can use this strategy on any time frame for different asset types, including forex, crypto, options, and stocks. At this point, let's begin discussing our trading rules. As we have already said, in this strategy, we will utilize two TradingView indicators. So let's add them step by step to the chart and optimize their settings. Step 1. Open the indicators window, type smoothed Heikin-Ashi candles, and choose this indicator. In this case, we will not adjust any inputs, because this indicator by itself is well optimized. So, this indicator is used to determine the directional bias for the trade. With that, when the smoothed Heikin-Ashi candle turns green, it sends an early unconfirmed signal for trade long. Consequently, when the smoothed Heikin-Ashi candle becomes red, it issues an early signal for the short trade. However, this trigger event indicator should be combined with a confirmation indicator to avoid multiple losing trades. When the trend is exhausted, the market is in the consolidation phase, and others. With that, let's move on to the next step. Step 2. Open the Indicators tab, type Heikin-Ashi Oscillator, and click on this one. As for now, let's modify the inputs by changing the Open Smoothing parameter to 7. Then, open the Style tab and disable all these points because we're not going to use them. With that, this indicator is one of the greatest indicators ever made as it allows us to effectively manage our position and confirm trend phases. So, let's dive deeper into it. First, confirmation is quite obvious. When the smoothed Heikin-Ashi candle is green, we should also spot a green Harsi candle along the bottom. But the key point right here is that the Harsi candle should be close to this orange line right here. This means that the trend is fresh, and we have plenty of room to run, so that we can safely enter the trade. With that, the trade should not be taken when the Harsi bar is significantly higher than the orange line. Exactly the opposite is true for the bearish case. After spotting a red smoothed Heikin-Ashi candle, we need to catch sight of the red Harsi bar, and, as in the previous case, this bar should be near the median line. But you probably wonder which Harsi levels are set to be invalid. In this backtesting video, we will ignore any trades when the Harsi is above or below the 10 level. Now, let's discuss another important point regarding the effective position and risk management. We modified the take profit structure a bit from the original video, taking into account the current market conditions. With that, the stop loss can be placed above or below the previous high or low, or smoothed Heikin-Ashi candle. Check the original video to learn details. When it comes to take profit, we will initially target 1-for-1 risk to reward, closing half position and moving stop loss to break even. Then, the following rules remain the same. We should wait for the price to advance in the red area in a bullish case, and in the green area in a bearish case, and close the rest position once the Harsi bar changes its color. Putting it all together, let's see a live example of the superb long trade. Here's Ethereum, a 15-minute time frame. As you can see, smoothed Heikin-Ashi candle becomes green, and the Harsi bar is below the 10 level, so that all our entry criteria are met. We enter the trade right here, with a stop loss below the previous low, and initially targeting 1-for-1 risk to reward. Here, we close half position and move stop loss to the break even. Then, we should wait for the price to fill in the red area, meaning that the Harsi bar should touch the upper bound of the red area. Finally, HRSI changes its color right here, so that we close the rest position. As a result, we caught an insane 5% move with minimal risk. Let's see the short example as well. Here's Apple stock, a 30-minute time frame, and we can see that the smoothed Heikin Ashi candle turns red right here. Now, let's take a look at the bottom. We have a perfect red HRSI bar right here, and more importantly, this bar is above the 10 level, meaning that we can enter the trade on this candle. We place the stop loss above the previous swing high, setting our first take profit right here. As you can see, the price dropped to our first take profit right here, so that we need to close the half with a stop loss trail to break even. Moving on, we should wait for the price to fill in the green area, which happens right here. Finally, we close the rest position when the HRSI bar changes its color. So, as you can see, we took a superb trade, catching a 6% move. With this in mind, let's finally backtest this strategy 100 times on Bitcoin, a 15-minute time frame, and take a look at the results. For backtesting purposes, we will utilize software from TraderEdge since it is one of the most efficient backtesting tools available on the market at the moment. Thousands of traders are using TraderEdge to get an edge on their competition. This intuitive and easy-to-use backtester gets up to 3 times faster results than using classic spreadsheets. Also, P&L Calendar and Trade Journal enables you to track your trades and identify what's working and what's not. Finally, the Indicators and Strats tab shows you the most profitable indicators and strategies that can be implemented in your trading. In addition, you will receive a full step-by-step backtesting guide, a full course on how to build a profitable mechanical trading strategy, and 4 pre-made high-quality strategies, worthing over $470 for free. TraderEdge has a 7-day free trial, so there's absolutely no risk. Click the link in the description below. Completed our backtest, and before we start interpreting the results, we want to note that we recommend using this strategy at least on the 15-minute time frame. Also, we want to note that during backtesting we had only one active trade. This means that we ignore any other entries when we have an active trade. Finally, we want to share with you our top private indicator, QuantAlgo, which can be used in combination with previously discussed indicators or on its own. This high-quality algorithm, which combines complex trading processes to tell you when to buy and when to sell, was developed to enhance your trading experience. You can use it on any time frame for different asset classes. So, if you want to access QuantAlgo to get results fast, all links will be in the description and the comment section below. Without this algo will put you at a disadvantage. So, after 100 trades, our win rate came in at 68%. Which is actually an adequate figure for the current market conditions. As you can see, our account would grow by 207.67%, which is an amazing outcome as well. For example, if you start with $1,000 initial equity, your account size will increase to roughly $3,250 after 100 trades. When it comes to the profit factor, it was slightly below 3, which is considered a strong value. And let's also analyze additional stats. We had 5 consecutive wins against 2 consecutive losses. Our largest profit per trade was 10.68%, while the largest loss per trade was 2%. However, our equity curve has the horizontal segment right here, which tells us that this strategy has low efficiency when the market is in a tight consolidation. As for now, let's add this strategy to our spreadsheet with backtesting results. And, as you can see, in terms of win rate and account growth, this strategy presently holds a second position. If you like this new format and want to see more backtesting videos, let us know in the comments below. We always appreciate your feedback. Thanks for your time and I'll see you in the next video.